Good morning, investors and traders. In today's segment, we'll be talking about S&P 500 and, of course, the Dow Jones and where are the prices heading from here onwards. If you haven't subscribed to our channel, I highly recommend you to do so. As always, it is important to go through this disclaimer and risk warnings, which are right in front of you. If you have any questions, please feel free to ask me. Briefly about myself, I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America, currently providing services as a chief analyst to our trade. Now, the chart which is in front of you, this is your Dow Jones Industrial Daily Time Frame chart, or also known as US 30. What we see from here is that the price is not really moving anywhere. First of all, it's just very much consolidating since August till now because the price is just moving in a sideways direction with no clear direction whatsoever. Yes, we did see the tops forming in around these particular price levels, and we did see the bottoms forming in around these particular price levels. But overall, the price has been very much trading within this range, within the high and within the low of that one since August, very much so. In terms of the RSI, we could say the very same as well over here, that we don't have any clear direction. And of course, all of this happened since the price made its high of that 35,524. After that, it seemed like that the price isn't ready to form any new direction. Now, one thing that traders do need to pay attention to is that perhaps this sort of a symmetrical triangle which is very much forming in this upward trend. That upward trend is over here. Now, of course, the usually symmetrical triangles would break in the direction of the trend, but over here we have few other factors which are very much about to play, or which are about to come into play as well. Number one is that the price is trading near its 200-day simple moving average, which is right over here. And then what we also have is the 50-day simple moving average over here is about to cross below the 200-day simple moving average, which itself is a negative or a bearish signal in terms of a price action. So if this crosses below that one, it would mean further sort of a sell-off in terms of a price. Further selling pressure could be hitting the price and pushing the price below its 200-day simple moving average. In terms of a support zone, we would be looking at that 32,874 sort of a price level as our first area of support. Now, of course, if the price violates this particular price action and then we go towards the next one, the next sort of a price action, the next sort of a support level is very much going to be coming somewhere around these particular price levels. And what we're going to do for that is we're going to wrap around our lines just like over here and over here. So shall we say, I'm going to change the color from red to green so that we can clearly see where our support zone is. As for resistance, that remains near the all-time high, with the one that we've seen previously, the 35,000 sort of a price level. Now, again, to summarize, we are focused on this particular area of support as a second area of support, this area of support as a first area of support, and over here as our resistance zone. Now, If we switch the gear and bring out our S&P 500 index just to see how the price action is performing over here, again, these signals are coming very clear that the price is moving towards that 200-day simple moving average, which asks us to put the lines for the S&P 500 index in terms of a support zone. So we expect that support zone to be near that 4,000 sort of a price level to 4,100. Again, the 50-day simple moving average over here is about to cross below the 100-day simple moving average in the coming days, and if it happens, that would be again classified as a very bearish signal. And the 200-day simple moving average over here obviously represents your immediate sort of a support level just right over here, but the important level of support is going to be that 4,000 to 4,100 sort of a price level. In terms of your resistance, the resistance is going to be near the all-time high of 4,500. So for the time being, you could continue to short this one, keeping your stop loss above the 100-day simple moving average, making sure that you are taking some profit as the price breaks the 200-day simple moving average or comes close to its 200-day simple moving average. Break of that is going to open the door for the price to come into this area of support. That's all for now. I'll see you guys next time.